Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for the evening of Wednesday, and we're at the 25th of May, 2022. So as you look at the market, there's an awful lot of green behind me. It's like a sea of green. Yeah, you have the gold down a little bit, but in the aftermarket, I can tell you futures are doing better, so that could help that. XLV down a fraction, GDX, but other than that, up. I can't help but get the impression that the market wants to put a spin on things and give a bit of a rally further in this market. We saw the FOMC notes come out. Everybody wants to see more of an interest rate hike. So you've baked in, from what I can read there, a June and July number. But now there's so much talk, and it's just all over the TV waves of, hey, has the market overdone it? Have interest rates gone too far? They're back down already in the 10-year note to 2.75. Housing, new housing, is getting crushed in one sense, but did you see Toll Brothers and some of the other housing numbers that came out? While the numbers are down, they're able to increase and pass on the pricing, and their bottom line is doing okay. That only lasts so long. I think you realize that. But I was surprised to see that happened, and the market was, and you saw the immediate jump that took place in that. You don't have the real numbers going to help that unless you drop mortgage rates back down and home prices either stabilize or inflation slips back, and that's the next story. Is inflation slipping back? That's what you have to wonder. When I look at Zoom, it had the numbers and the market took off, and we're getting a bit of a zoom, up 8.5%. That's a big number. When we come to the swing lines, the trend is up, higher lows, higher highs. So what really happened, if we can take a look at this, is the market had been in a downtrend with the lower highs, but then it started making higher lows, and it just sort of hung here. You then started sticking your head up yesterday in the marketplace, and we saw the earnings number come out late in the day, and the market took off today. Okay, where are the moving averages? I'm going to back up again. You've been fighting your battle. I think you see that right here. Certainly going home on Tuesday before the earnings, the bulls grabbed control. You had higher highs, higher lows. Yep. You had a market that just squeaked out. And when I say just squeaked out, by 30, 40 cents, okay? Closing over 93.92. The risk on the trade was back here to the 70, what was that number? That number is 85.57. And then the question is, what's the upside? Well, one of the targets, just leaving where we're at on the chart, could be 123.26 with the risk down there. But more likely, it's going to be the Bollinger Bands, and those come in right here. So I'm targeting 108.26 now as the likely upside number that'll give this market a difficult time. But you have reverted. The trend of the market has turned itself up. It'll be interesting over the weekend when I do my subscriber videos. I might include this now to take a look at what Zoom's going to look like with the weekly charts. Is this just a bounce, or is the week also turning? On the slow stochastics, momentum up. Now, if I come back to yesterday, you had the momentum up. You had bias up. Momentum gradually has been turning up. Swing line up. Target number, and that's still where you're at. So I can make a very strong argument that I think the 108.26 level's in play. In AMC, I read the reviews of Top Gun. They don't sound bad. It's not going to be a blockbuster other than Tom Cruise bringing in whatever he brings in. It doesn't sound like this is going to be one of these movies that's just going to do it, but who knows? People are dying for a good movie, and that one has a legacy with it, so I think a lot of people are going to want to see it. In any case, you've been playing down here. You're stuck between the 18-day average of closes and the lower Bollinger Band. My mind's on the week from what we just talked about on Zoom. I don't see anything to get me bullish, but I have reasons that I don't want to be bearish, and I said that down here when we got there. I said, you know, it might be just time. Let the summer, because summer's right around the corner, let the summer come into play. Movie theaters do better in the summer. Maybe this is where the seasonals can kick in a little bit. When we get to Apple, you still have lower highs, but now you have higher lows, and you're staying oversold. For no reason at all, you can get a pop. The biggest problem in Apple is the supply chain. It's not that people don't want their goods, it's the supply chain. If you're watching, I was watching one of the biggest bulls on Tesla's, Dan Ives, and he has lowered his targets back to 1,000 in Tesla. Not that the car isn't selling, but they can't get enough cars made. This has been an epic event. These are his words. What's happened in China where you can't even sell a car because of the lockdowns. That definitely hurts. Well, Apple's been going in its own way with that too. And this stock, let's not forget, this was a stock here near the 180 level that has fallen back 30 some odd percent. It's a big break. It's not just a phone company. It's got a lot going. To give you an idea that the market's ended this next wave down, the key is to take out 143.26. That would open the door for at least the 148.60, the 18-week average of the 18-day. I'm back to the week, 18-day average of closes. In Disney, lower highs, trying to eke out here, play with these lows, if you will. I don't know if it's going to be able to get back and challenge that 113-cent zone. If the market can get back over now 106.03, it could be the beginning where the market wants to finally lift up and challenge the 18-day average. Is the market still bearish? Yes. Is it oversold? Absolutely at this point in time. So the question is, can it leave its downtrend? And I don't know that the pros will want to sell it fresh when you're in oversold territory. In XLF, higher lows, higher highs. I got my first buy signal in XLF today, and I don't know how long. I don't want to see the market get under 33.22, and the door is open as far as I'm concerned for the possibility of 35.60 here, that upper Bollinger Band. When I go to XLI, you're out of your downtrend. You now have converted the market, all right? So I can't get this to, it doesn't want to let me go back a day. There it goes. It's going to let me do it now. If you take a look, 91.44 was that high. Up until now, you've had patterns that restarted the downtrend when you hit this number, fell back, came to these lows. But if you take out 91.44, you open the door by saying, okay, the pattern is broken. You no longer have what? You no longer have lower highs, lower lows. You suddenly have higher lows, higher high. It's called a contra-trend rally. They often culminate with the market making a run for the 18-day average of closes. So far, that's been a pretty good resistance point, so that's what I can hang my hat on that could be happening. In the semiconductors, they're still in the bear phase. To negate it, you've got to take out 72.33. I've been looking at this chart also. Is there anything here? If you take a look at this low, 164.55 was the low there. You then drop back and you make a lower and low. It doesn't look like it necessarily on the chart. So even if it picks up over 172.33, to get the pattern that I'd like to see of higher lows, higher highs, so you have stops that make sense if you're going to be a buyer, fine. What are the pros saying about the short side? I think they're going to try to sell it. So I think the pros might greet this market with short sales at 171.53, but if you get over 172.23, I think they say, bye-bye, don't need to play this game anymore. In XHB, you ended this down wave. You made a higher high. So you've got a lower low, a higher high pattern. You came down, got oversold. You're getting your bounce. We had talked about that I don't think the pros, when you get this oversold in markets, measured by the slow stochastic, not that I think it's oversold, when that occurs, you just don't get a lot of new selling. In XLE, higher lows, higher highs. Will you embed? Now, what do I mean by embedding? Let's take this back and see if it'll work with me. There you go. Here's what embedding is. When you get 3 days in a row where both numbers that make up the slow stochastic, one is called a K, that's the red, D is the blue. They have to both be going sideways over 80 for at least 3 bars, 3 days, 3 weeks, whatever type of chart you're looking at. That you convert the market into a very powerful signal. You have one set. You got the second set today. You could get the third on Thursday. If that's the case, I think another wave to the upside in energy is going to happen. And I know you think I'm crazy. At these prices, how could that be? You ain't seen nothing when you get into a bull market that people say can't happen and it just keeps going. In the gold, I think the pros bought today. I think today was the buy day. Right here at the 18-day average, I think they'll keep their stops right back here. The low of this particular day was 170.89. So I'm thinking they reached into their pockets and they said, okay, you stuck your head up. I've got a combination of roughly the 200-day average with the 18-day average of closes. You don't reach for the two. The way I teach charting, we'll talk about what I teach in a moment here, by the way. You don't buy under that average. Remember, bias is determined by it. So on a pullback, that's where I think they bought it. They went home to the good about, from the looks of it, 68 cents. And I think that the objective on the trade is really no more than up here, the 175.92 to 176.57, but it's $3 up there. In GDX, I don't see the same thing. I see a market that's just fighting at the 18-day average. So while gold may be going, I don't see it on this chart at all. On copper, I'm still very much in the bull camp, but it's overbought. So as friendly as I am copper, no. I would never tell a trader to buy an overbought market, period. If it goes higher, say la vie. Is the trend up? It most certainly is. Where did I tell you I thought the first key resistance would be? And I started telling you that. We're going to have to go back and then forward for me to do this. I know I was telling it to you all the way back here, that if this market comes alive ever, if China would say, hey, we're going to open up Shanghai, you'd get your rally. You go back and you look at these dates, you'll see that that's when it occurred. And then I was targeting the 200-day average with the 18. And that's exactly where you're at right now. Could it reach higher? Absolutely. If it decides to run, the next levels are 41.03 to 41.21. Is the market a buy? I think you'll get some buyer interest at 37.60, but not from me. Why? Overbought. I pay attention to that. AGG, boy, was that a stupid remark I made. You know, I didn't want to take buy signals in TLT, AGG, BND, and I told my subscribers this. I said, the Fed has the markets back. We're going to get interest rate hikes, a minimum June and July, possibly they'll do something in September. That's still up in the air. Depends how inflation looks and what the economy's looking like. But we know, whatever that means in quotes, for the next 8 weeks, that's going to be it. And even though you're getting buy signals and the objective was reasonable at the upper Bollinger Band, I elected not to take it on. Now, take a look here. Now, could I have? No. You were overbought when the buy signals happened. So that doesn't mean that I'm wrong in what I did. But I probably shouldn't have locked myself in and said, gee, we won't be buyers. It's up at its targets. Do I think there's big legs on it from the upside here? No, but the trend is up. You know, I certainly wouldn't say go short. Next, we look at UUP, which is the dollar index. I said yesterday, past 2 days, I think that the first challenge of a lower Bollinger Band is you're coming down, you get oversold, the pros take their money out. The trend has been down, a tradable down, and that's where I think they stepped away from that market in its entirety. So that's where I'm seeing it. And the flip-flop is true of the euro. The euro rallied all this way back to the 18-day average, to the upper Bollinger Bands and failed there as well. So it had its support right here. It fought a pretty good battle at the 18-day back and forth and then resolved itself. And of course, it had Miss Lagarde saying that things are going to change, and they did change. If you like what I do here, why don't you learn to do it yourself? It's not that hard, I swear to you. How I teach is so simple. I created a whole video series. I think there's 54 videos in it. And you go to school with it. It's real simple. You will finish the videos looking at them all in about a week and a half to learn. You can do them much quicker, but you won't learn a thing. To learn. What I like to do is I don't start, the way I like to build courses, and I built them for decades, is each chapter, learn the chapter before you go to the next one. Don't go racing through to get to a conclusion. You learn nothing. If I were to quiz you at the end of each chapter and you have that, you understand it. So I'm going to give you the basics of Bollinger Bands. I'm not going to teach you the enhanced Bollinger Band. That's the course after this one. You're going to learn window envelopes, how to use them, what they do, how to apply them. I'll give you the numbers, you apply them, they're part of your course, and you'll see how these all work out and where they come. There's only 5 steps in the course. I think you can master that. You're going to get Bollinger Bands, window envelopes, moving averages, swing lines, and slow stochastics. It's pretty easy. 5, that's it. 54 videos, approximately 8 hours. You see what I do. You do the same thing. We give you the charting software, and we give you the data that goes back when I created the course. Remember, if I'm going to do videos, they're older. But then every morning, to go with the course, I throw in my morning subscriber videos, generally both the ETF and the morning futures. And now you see each and every day, because you've got the charting software, it'll do it. You see, oh, there's the chart. Look what he did with the swing line. Oh my gosh, look at what he's saying with that Bollinger Band. I see it. I'm putting on the window envelopes. You can do this yourself. And once you start doing it, you have the framework of what I teach. Can you build on it and take it to other areas? Of course you can do that. And that's what I want you to do. I want you to build. I want this to be a centerpiece of what you do, or at least an addition to it. So you get the research, you get the videos, you keep going through them. You'll finish the course. It's an 8-hour course. It's not going to take you that long. How do you find out about this? You go to our website under the word education, or you can go right now, just follow my cursor, follow it up here, click on the icon, that'll take you right to the education section. I'm Ira Epstein. You have a great day. I'll see you in the morning.